Hello and welcome to this Thursday's morning market briefing. We've got lots to talk about, but firstly, US markets suffer worst day since 2022 as Tesla and AI stocks do fall. As well as that, Kamala Harris bets on surge of voter enthusiasm as she eyes path to US election victory. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. The first article to talk about is to do with US markets and AI stocks. Now, the top US stock indexes experienced a massive sell-off over the course of yesterday. This market action follows the poor earnings results from tech giants such as Tesla and Alphabet. Now, of course, if you watched yesterday's morning market briefing, you know all about those earnings reports, which did, of course, those quarterly reports for Tesla and Alphabet, which did come out yesterday, or at least were covered in yesterday's morning market briefing. In that morning market briefing, of course, we covered what took place with those quarterly results, which did, of course, come in below expectations. So we did see revenues come in below what analysts were expecting quite significantly, and even for the companies, even for the tech companies, which did find some gains or beat expectations somewhat, it was only by a very small margin. So as a result of that, many were kind of taken aback, and that's why it does seem like we're now seeing this sell-off in the market, why we are seeing this market reaction to the downside. Now, ultimately, why did we see kind of those poorer quarterly results? Why did we not see revenues at the same levels, and why did we not see just the profits coming in at what analysts were expecting? Well, number one, as we did cover specifically with Tesla, Tesla's been struggling greatly recently, just as a result of the EV industry being a kind of a down point, this kind of trough in the market, where we are seeing governments move away from implementing strong economic policies which help EV manufacturers. So we're seeing governments kind of move away from that, and also we're seeing just a lack of demand generally because of worries to do with batteries and other kind of key things relating to EVs, relating to electric vehicles. An added part of that, though, is of course the competition that we're now seeing across the globe. Obviously, when Tesla was first emerging, there just wasn't the same competition within the market. Yes, there was competition, don't get me wrong, but still not the same levels that we're now seeing. And ultimately, it's the likes of those Chinese EV manufacturers, I believe BYD being one of those kind of key ones, which are now just kind of competing with Tesla and other EV manufacturers at a level which obviously they weren't expecting. And as a result of that, obviously we've seen Tesla and Elon Musk try to respond in their ways, with that including, of course, trying to work with the Chinese government to enable Tesla's key features relating to self-driving technology and AI technology being implemented into those Tesla vehicles over in China, which is of course a massive market. So that's obviously been one attempt pursued, one strategy pursued by Elon Musk and Tesla. But also, it's hard to do this when, as we know, Chinese exports are coming in far cheaper than, of course, what we're seeing with these kind of Western EV manufacturers. Now, we are now seeing a response, obviously, from Western governments or Western kind of organizations. Of course, the kind of key response to these low prices being that of the European Commission's investigation into Chinese subsidies for electric vehicles, in which obviously they're investigating whether these subsidies are being used to basically lower the manufacturing costs of these EV manufacturers, and therefore come in at kind of unfair price levels, and therefore beat Western competition, which of course many of these European manufacturers just can't compete with because they're not seeing the kind of same subsidy levels as they might be seeing over in China. So that's one thing that we've started to see, and as a result of that, we start to see tariffs come along with that, which is helping kind of deal with that issue. But also we spoke about Alphabet, of course, and Alphabet was less of a kind of worry, it did seem like. Whilst yes, costs are far higher as a result of renewed investment into AI infrastructure, structure as we saw with Tesla. At the same time, the quarterly report did show, in fact, that, AI had not destroyed, the concept of the Google search engine. And in fact, it did seem like Google was going to be able to hold on to its place as the search engine of the world, rather than maybe a competitor like ChatGPT in the AI space coming along and completely destroying the once known Google search engine, which everyone used to use, right? So that's the kind of key thing to note from what we spoke about in yesterday's morning market briefing. Today, though, we're really going over the market impact, it does seem like, of this news with the quarterly reports. And obviously the fallout is massive, with the market sell-off meaning that the markets recorded their worst day in more than 18 months. The S&P 500 fell 2.3% over the course of Wednesday, which is its worst day since December of 2022, and the Nasdaq fell a larger 3.6%, which makes it its worst day since October 2022. Such a crash in the stock indexes has largely been driven by the likes of Nvidia, Microsoft, Apple, Tesla, and most importantly, of course, Nvidia. So pardon me for that poor grammar there. Now, since these tech stocks have been really the engine for the market gains over the past year following the AI hype. So ultimately, because they were driving the market to the upside, now that we're seeing kind of some poor news come in relating to these AI stocks, that's why we're going to see such a kind of market reaction, such a sell-off, because they've inflated these stock index prices so much higher than they would be otherwise without these AI stocks. And so the poor earnings results for such stocks is now significantly weighed on by pardon me, I'll go over that again. And so the poor earnings reports for such stocks has now significantly weighed on such gains, and as a result sparked quite a significant sell-off. As we spoke about yesterday, Tesla failed to meet the profit target and thus fell 12.3%, which marks its worst daily performance since 2020. Alphabet, just like Tesla, also took a steep fall of 5%, which is its worst day since January. This stock market retracement does seem to now mark the movement of investors away from stocks boosted by AI hype in a move to once again focus on the more unloved corners of the market where smaller companies exist. So that'll be a very interesting transition to watch. Definitely keep your eyes on the market, though, as we'll come back to this on the chart section like always. So wait around to see that. That's all to talk about this article, though. Next article to talk about is to do with Kamala Harris and her election campaign and now how that started. Now, Kamala Harris is seemingly now betting on the surge of Democratic enthusiasm as she needs to find the support required to propel her campaign for presidency. This comes as she secured her position as a presumptive Democratic nominee for president, and thus she has hit the campaign trail hot to raise more than $100 million. Now, of course, this has been a topic of great discussion recently, as we've been covering the kind of presidential election campaigns for quite some time now, going back even before the primaries, before the invisible primaries. We were talking about Donald Trump and Biden, what was going on with both of them. Then of course we went into the primaries. That was more important, of course, on the Republican side, but now it does seem like maybe it was more important to talk about on the Democrat side, because of course now Joe Biden is no longer the presidential nominee for the Democratic Party, and as a result, many are now questioning the kind of the fairness of Kamala Harris really being the Democratic nominee when nobody seriously voted for her. Maybe you could say because they were voting for Joe Biden and Kamala Harris was the VP, she does have somewhat of a Democratic mandate, but at the same time, they weren't voting in Kamala Harris as the president directly, but rather they were voting for Biden instead. So, that's the kind of thing that we may be hearing increasingly over the coming weeks as the campaigns do heat up and we do get nearer and nearer to that November election date, which at the moment, seems some time away, but certainly, you think it's far away, and then suddenly it's tomorrow. So that's why this is, of course, a very important topic to cover, because this topic does affect markets so much. Obviously, Biden and Trump were both proposing very different economic policies, but at the same time, both pushing for policies which were to increase the national debt quite significantly. This was something that fiscal agencies were warning of. And it does seem like Kamala Harris will be following that same economic policy of Joe Biden. And so, we have to kind of think through that lens as well. All these questions and all these thoughts are very important to kind of factor into your macroeconomic perspective or your just general economic context. Basically, the political context greatly affects markets, which is why we're covering it, of course. With her campaign now having signed up almost 60,000 people as her volunteers. Her main message to voters thus far has been that she's previously worked for generational change and Trump represents the past. She also noted that she would utilize her experience as a criminal prosecutor in the past to attack Trump for the charges being brought against him. Ultimately, though, no matter how good a campaign she may be able to go on, or however good the campaign may be, ultimately she'll be fighting an uphill battle with only 100 days to go. So that's the kind of key thing to note there, of course, is there's only really 100 days to go. So how much can Kamala Harris really make up on, of course, Joe Biden's failures within the election campaign thus far? As arguably the kind of key reason why Biden ended up dropping out is because he was losing in basically all of the polls, and he's losing in those key swing states. So if Kamala Harris can't make a dent at that, can't start to reclaim, those kind of losses that Joe Biden's now experienced, then it's definitely going to. It seems like it's then definitely going to be a kind of Trump victory. So definitely keep your eyes on this topic. Definitely it will be affecting markets, so definitely keep your eyes on that. That's all to talk about on the articles, though. Next to talk about, like always, is the charts, where we're beginning on the US indices. US indexes, pardon me for that yawn, but ultimately, we're returning to US markets, the US stock indexes, which obviously links back to that first article that we spoke about, to do with Tesla, AI stocks, and that kind of thing. After, of course, we've received many of these quarterly reports, which aren't coming in as well as previously expected. Now, on the US 30, of course, we started off the week kind of stalling out just above this 50% Fibonacci retracement level. And even over the course of yesterday's morning market briefing, we were looking at the markets with price just sitting on that 50% still. So we were saying there was a possibility the price would, of course, utilize this level to jump higher somewhat, but of course we have not seen that at all. Instead, we've broken below that kind of small area of support, and now it does seem like we're on the downswing. But that said, of course, in those morning market briefings, I did note how this lower level of liquidity and Fibonacci retracement level of 78.60 was a very key level to note, and rather than maybe the 6180 and the 50%, which didn't really line up with two key support levels. Ultimately, that 7860 lines up with a very key liquidity zone, which has previously been utilized as not only an area of resistance but support previously. And therefore, if we are going to see a retracement take place, it does seem like that is the more favorable area at the moment to consider. So definitely keep that on your mind when we're looking at something like the US 30, when we are experiencing this retracement following the quarterly earnings reports and following, of course, the IT outage last week. Next to talk about, though, is the US 500, the S&P 500, which, of course, we don't usually cover on this channel, but ultimately, because of that first article that we did speak about, I think it is very important to note, as that sell-off that we are experiencing is far larger than what we're experiencing on the Dow Jones. And as I mentioned earlier, this is all largely explained by the fact that tech stocks, have really been the thing that's been driving markets higher, US markets higher, as a result of the AI hype that's currently surrounding the world, surrounding markets, and that sort of thing. And that's really why we've seen such a rise in the S&P 500. If we just go on the daily, look at this massive upswing that we've had since the kind of Fed pivoted its economic policy, macroeconomic policy. So we can definitely look at this and understand it as a kind of AI boom that's taking place. Whereas if we go on the US 30, whilst we can see this upswing, ultimately over the past few months, definitely since the start of this year, start of 2024, we really haven't seen those gains that have been made, in fact, for the S&P 500. And so the sell-off that we're now experiencing on the S&P 500, if we go down on the lower time frames, is very easy to understand as this kind of the better understanding of the AI situation. Whereas for the Dow Jones, they're not really having to deal with that issue. Ultimately, though, after we've got past all that waffle, price is currently sitting on that 50% Fibonacci retracement level. And so that is a key level which price could bounce now back off and move again to the upside. As well as that, of course, the 6180 on the lower end is of course also lining up with a key area of previous resistance. So possibly price could make its way further down to that level before a swing higher. So definitely keep your eyes on the S&P 500. It's very interesting to see what's going on at the moment following these quarterly earnings reports, and as a result following also the IT outage last week. Definitely keep your eyes on all US indices. Next to talk about though is the dollar, which we'll have to cover faster, but ultimately that's because not much is really happening. I've been recently talking about a potential inverse head and shoulders pattern that's forming on the dollar. That's something that I've noted, and you could argue that that's of course the shoulder and the other shoulder there, the baseline, the head there, and possibly therefore we could be expecting a swing back to the upside. But at the same time, it isn't a very clear or clean pattern that's formed, and therefore it is hard to tell where things could be going from here. So definitely keep your eyes on the dollar as price does currently kind of stall out, consolidate, and range around these two liquidity zones. Next to talk about though is Euro USD. So still on top of the dollar, which is broken below this liquidity zone, broken below this key support level, but ultimately is not making that significant a move, and instead is just halted, has just halted and is stalling around this zone. So definitely keep your eyes on Euro USD. We are receiving the ECB's President Lagarde's speech today, so definitely listen out for that one. That will be affecting markets, but apart from that, we're not receiving much Eurozone news or dollar news. So it's pardon me. It's hard to expect a great deal of movement for Euro USD during this time. Next to talk about though is pound yen, which has made very significant moves over the past few days as prices sold off significantly ever since, of course, price shot to the upside after this very extreme rally that took place over the course of June. We saw this continued push to the upside with no real retracement. Then starting July, we kind of formed this bearish flag, which in fact broke to the upside before swinging massively to the downside, reacting to these lower levels of liquidity, and then over the past few weeks we've really started to see price just decline, fall off a cliff, even with price falling from that 204 level all the way down and through the 200 level, and now we're sitting around the 198 level. So a very significant sell-off, and now we're touching levels not seen since the 4th of June. So a massive retracement is currently taking place. Definitely keep your eyes on pound yen as things do shape up quite interestingly. Not too much economic data for pound yen to know, but yeah, still keep your eyes on it nonetheless. Next to talk about is Bitcoin, which is sitting still at that $65,000 a Bitcoin level, just sitting on the 50% Fibonacci retracement level, arguably breaking slightly below it, but ultimately it will be interesting to see whether the price will utilize this area to swing further to the upside and maybe tap those higher levels around the minus 27.2% Fibonacci extension level. So definitely keep your eyes on Bitcoin for that, but of course it's hard to note out whether these levels will be of significance during these times where macroeconomic policy is the key thing to be looking at. So anything from Jerome Powell or the Fed or US dollar or anything like that will be affecting Bitcoin quite significantly. So definitely listen out for that always. Next to talk about is gold, which is still and around that $2,400 level. $2,400 level after price kind of swung a bit to the upside over the course of yesterday before then selling back off from that 243 level, 2430 level, and returning back to the 2,400 level. So it'll be interesting to see now whether we'll bounce off that level once again, or in fact are we going to consolidate or break below. We'll have to wait and see, but that's currently what's happening on the 4 hour. Once again though, as I've said many times over the past few months, it does seem like more is forming on the 1 hourly than really the 4 hourly at the moment, just with the way that price is moving. So maybe zone in or zoom in the markets and have a look on the 1 hour, maybe even go on lower time frames like the 15-minute to better understand what's going on maybe for gold at the moment, as there is such volatility surrounding wars around the world and US macroeconomic policy and that kind of thing. So definitely keep your eyes on that. Next to talk about though is oil, pardon me, sorry I'm tired. Ultimately, oil is still in around that $81 a barrel level, so not much has happened for oil over the past day, over Wednesday, as this is obviously following a great deal of bearish momentum that's entered the market for oil ever since the 5th of July. So that's all to talk about on the charts though. Next to talk about, like always, is the economic calendar, where, to be honest, there's not much to note, so we'll get through it quickly. First, you receive the French business confidence figure, followed by the Chinese FDI figure, and then the German business climate figure, followed by that receiving the US durable goods and GDP growth rate figure, and lastly, the ECB's President Lagarde speech, which is the important one to listen out for. That's all to talk about on the economic calendar, though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. It'll be a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.